So guys, now let's get into the correct or incorrect questions forming part of ICAI's mock test paper for CA Intermediate. So question number 1. Mr. Z, a team member of Auditor of Grateful and Competent Limited, was of the opinion that while conducting an audit of a company, no distinction is required to be made between revenue expenditure and capital expenditure. Is it right or not? It is completely incorrect because you need to clearly make a distinction between what is revenue expenditure and what is capital expenditure. Why? Because your revenue expenditure will hit your P&L, whereas your capital expenditure will hit your, it will hit your balance sheet. Next, the audit engagement letter is sent by the client to the auditor. No. The audit engagement letter is always sent by the auditor to the client after agreeing on the terms of the audit, and this is stated where? It is stated in SA 210, which is agreeing the terms of audit engagements, right? So as per SA 210, agreeing the terms of audit engagements, the auditor has to send the audit engagement letter to the client. Third question, a detailed audit program once prepared for a business can be used for all businesses under all circumstances. This is absolutely incorrect. Why? Because you have different businesses in different industries. For example, you have healthcare as a sector, you have ITS as a sector, you have hospitality as a sector, you have tourism as a sector, you have manufacturing as a sector. Even within manufacturing, you have automobiles, you have heavy metals engineering. There are a lot of sectors, a lot of industries. So one audit program, if you prepare, it is not going to cater to the needs of all businesses. One, even within the same sector, say for example, within the same, as we discussed before, even within the same sector, say FMCG sector, which is fast moving capital goods sector, you also have a local anachi kadai, a kirana shop, and at the same time you have Walmart. The internal controls of Walmart are going to be completely different from the internal controls of this local shop. So even there, though the businesses are in the same sector, the way you are going to approach the audit, the way you are going to plan the audit is going to be completely different. And what is your role in that audit also matters. In one place, you might be doing a risk assessment process. In another place, you might be doing a due diligence process. In one place, you might be doing a stat audit. In another place, you might be doing an internal audit. So what is your role also matters. So what we need to understand is businesses vary in nature, size and composition, as we discussed. Work which is suitable to one business may not be suitable to others. Efficiency and operation of internal controls and the exact nature of the service to be rendered by the auditor are also the other factors which vary from assignment to assignment. On account of these variations, evolving one audit program applicable to one business under all the circumstances to all the businesses is practically not possible. The next one. Assertions refer to the representations by the auditor to consider the different types of the potential misstatements that may occur. This seems to be perfectly correct, but is it right? No. In the definition of assertions, you have this word representations, perfectly correct. You have the word to consider different types, correct. You have the word of the potential misstatements that may occur, perfect, correct. You also have the word auditor. Auditor has to consider the different types of potential misstatements that may occur, perfectly correct. But what is wrong here? There is something wrong here. The mistake here is the representations have to be made by the management. It is not by the auditor. So assertions refer to the representations by management that are embodied in the financial statements as used by the auditor to consider the different types of potential misstatements that may occur. If you are a smart kid, you will not just stop with this. You'll also do something more. What will you do? You'll also write examples of assertions. You'll also write 2 or 3 examples of assertions like accuracy, completeness, existence, occurrence, cutoff. You'll write some examples. That's what a smart kid, a wise kid who's aiming for a rank would do. The next one. One of the directors of Very Fresh Fruits Limited was of the opinion that internal auditor to be appointed must be an employee of the company. As per section 138 of Companies Act, the internal auditor could be a cost accountant or could be a chartered accountant, whether he's in practice or not, or it could even be an employee of the company who's possessing the required skill set. So it need not necessarily be only an employee of the company. It could be a chartered accountant in practice or a cost accountant in practice, or a chartered accountant or cost accountant not in practice, or could be any other professional with the required skill set, whether an employee or not. So that's what the Act says. The next one. Audit committees will be constituted by every public company to ensure better standards of corporate governance. This is absolutely wrong. As per section 177 of Companies Act 2013, it states that audit committee has to be constituted by every listed company and certain classes of public companies. What are those public companies? It works by the model 10 into 10 by 2. What is 10? Paid up capital. Every public company having paid up capital of rupees 10 crores or more. Okay, tick. Second condition. Or every public company having turnover of rupees 100 crores or more. So 10 crores of paid up capital or more, 100 crores of turnover or more. So 10 into 10. And now by 2, which is 50 crores. What is 50 crores? What will you say? Okay, now that you have commented on revenue, now that you have commented on capital, now comment on borrowings. The total borrowings in aggregate, it could be the loans, the debentures, the outstanding loans, debentures, deposits, all these borrowings put together. If it is exceeding 50 crores, in the first two conditions it is or more is there, whereas with respect to loans it is exceeding 50 crores. Only these public companies have to constitute an audit committee. Okay, the next one. The auditor has to report under section 143 of Companies Act whether the company has adequate internal controls in place and overall effectiveness of such internal controls. This is absolutely correct except for one keyword which is missing here. The auditor under section 143 of Companies Act 2013 has to has to report on the adequacy and overall effectiveness of internal financial controls. So what are internal financial controls? Internal financial controls relating to FSLI, which is financial statement line items. So it is internal controls relating to financial reporting items. Only those controls he need to report and not on all the internal controls. So this line is perfectly correct except for the word internal financial controls. So remember the word IFC, internal financial controls. Next, tangible assets are depreciated when the asset is actually put to active use. So what is depreciation? Depreciation is a fall in the value of the asset due to obsolescence, effects of time, usage. So it is incorrect because depreciation is charged when the asset is ready for use. You need not wait for the asset to be put to use. Say for example, you are buying a cell phone today from Purvika or Sangeeta, and tomorrow you are going and giving back the cell phone to them. So today you bought it for 10,000 rupees. Tomorrow are they going to take it back at 10,000 rupees? No. They'll say, no sir, no sir, no sir, the phone is ready to use. I said, no sir, I did not use it at all. Sir, whether you use it or not, the phone is ready to use. It is already depreciated. No sir, one day is gone. So maybe we can take it only at 9,000 rupees or 9,500 rupees. So once an asset is ready to use, you start depreciating it and you need not wait for it to be put to active use.